All right, so the road to 65K Bitcoin. Anybody excited? Hopefully you're excited. All right, so just to introduce myself real quick, I'm the cryptocurrency analyst at Elliott Wave Trader. We are a site, all of our analysts are not Elliott Wave theory analysts. I am for sure. I apply the Elliott Wave theory to cryptos. I actually joined EWT, as we call it, as a member in 2015. I was following Avi, who's my mentor, and his calls on SPX. Some of you guys may be familiar with him, very prolific author on Seeking Alpha and Market Watch. And I was like, man, this guy's pretty darn accurate with his turns in the SPX and gold markets. And I joined up with the trial, just as I'm inviting you guys today, and eventually became part of the team in 2015. I started trading cryptos in 2012. I actually come from a product design and industrial design and product strategy background. I was practicing design and product strategy at Samsung up until about 3 years ago, and I've left my career to trade professionally and be an analyst on the site. Started hosting the service in August 2017, just in time for the bear market to start. Here's just a quick picture. You can see my picture posting here. I do a nightly report on Bitcoin, except for Saturdays where I do a webinar for members. I will do any chart request in the crypto space, but I really focus on Ethereum and Bitcoin down to a very tight level, so 5 minutes. Not everyone likes that level of, so some people just come for the nightly report because you can get a nice take on the bull market from the nightly report. I do very clear levels where I see the line in the sand, so to speak, using the Elliott Wave theory. But some people really like, I provide scalp opportunities, swing trade out opportunities. I personally am a swing trader by nature. You can also post, like some people use the site to actually learn. So that's exactly how I became an analyst. I was a member on the site posting, and they ended up picking me up. So it's kind of the way we work. Just some quick disclaimers. I don't want to read them off, but be careful with cryptos. They're dangerous. I love them, but they're not for everybody, basically. And I'm not recommending that you go and trade them. Use any exchanges or services I mention, but do your own research. So we're going to look back at the 2018, the Great Bear 2018. Definitely not the biggest bear in cryptos, but it's the one most people are aware of because we had the most adoption going up into it. We topped in 19K. If you were a member of my site, I was looking for 14K. I was zoomed right past, and I said next level that we should be topping is around the 18 to 19K region. Boom, it took. And if you followed me since February, I'll show you the slide from 2018, February. When that rally failed, I was looking for a hold between the levels of 4,600 and 3,000, and 3,100 took. Now, that's a big space, but it's because the long-term Fibonacci's, which I'll talk about, were spaced that way. And if you recently saw my writing on Seeking Alpha, actually in the name of Avi Gilbert, who I usually write collaboration with him, I was looking for a top at 13,425. Okay, I was a little bit off, 13,900. We got a local top. I don't think this bull market's done. You can tell from the title. We're probably going to at least 65, and I actually think ahead of that now, depending on how we bottom here. But we'll get into that. So we dropped 85%. And another thing that I really saw as interesting to me as a study of sentiment is that we went from euphoria to apathy. Sometimes in bear markets you go from euphoria to utter fear. And what I saw was a market that turned to apathy. ATR, average true range, if you're familiar with the indicator, is one measure of volatility. And we went from $1,800 a day, average true range, down to 140. No movement. For someone like me who makes his income on the crypto market, this really sucks. I don't care which way it goes. It wasn't going anywhere. So it became very difficult for me in my new course of work. But there's nothing new under the sun. If you actually are familiar with cryptos and you look at your charts and log, which I think is a very important exercise in any chart, you understand that this is actually a very tiny bear market in terms of percents. I've been in this thing since 2012, and by no means, the top in 2012 was far more horrific, went from 1,200 to in the hundreds, so about 90%. So any bear market over 60% in the crypto market is kind of plain, kind of boring, to be honest. That's just the way this asset moves. So, and nor was this unexpected, as I said. This was my first talk at Trader Expo, MoneyShow. February 2018, the bear market had just started. I was tracking this rally in February. You can see that I have this big square in that area, which is pinpointing a resistance area. That's what I do for subscribers. And it failed right there. And this big box underneath, which goes from 4,600 to 3,000, is the two big key Fibonacci levels based on the Elliott wave theory. And eventually we found the lower end of that. And again, they're really big because what you'll see in the work is sometimes those big long-term fibs are very far apart, and then as we get price action that goes lower, it sort of starts to tighten up. The levels start to get a little tighter as we get going. But all I knew was once that February rally failed, we did have another try in April, but I believed that 3,000 was sort of the ultimate, for one way of counting this market with the Elliott wave theory, was ultimately where this thing should rest, and that's what we hit. We hit 3120 on the exchange that I use. I love following Bitcoin obituaries, which is this site 99 Bitcoins. Bitcoin has no unique value at all on CNBC, 3852 just after the bottom. That's so typical of them. Nothing against CNBC, but be careful what you listen to. Why Bitcoin will fail. This is another one, 2011, when Bitcoin was $3.12. Okay? Why Bitcoin will fail at 312, and then we bottomed in this last bear market at 3,000, and now we're sitting around 10,000. And CCN recently at 10,842, the impending death of Bitcoin by 1,000 cuts with the help of the Treasury Department. It just never ends. What I want to express to you is, in this next section, is that Bitcoin is now a very established institutional asset. During this bear market, we saw immense accumulation by the smart institutions. Not all institutions, not all big money are smart money, but we definitely saw that. Now I'm going to go by secondary evidence. I mean, I've had a lot of discussions with hedge funds and folks that on a first-person basis. So but that's not data. I don't know how big this market is necessarily. But let's think about this. Futures began trading on the CME and CBOE in late 2017. Why did the futures exchange start? Did it start for you and me? Absolutely not. It started for institutions who were starting to hedge. A lot of people like to blame futures for the bear market. I don't go that way. I was looking for a bear market to happen anyway. But those futures exchange started because the officials were being lobbied by large institutions. You take a bunch of Bitcoin, you put it in a secure wallet. How the heck are you going to hedge it? You need some kind of paper asset to hedge that. Otherwise, you're going to be moving Bitcoin around and all the security issues that involves. So we also had the rise of institutional liquidity providers, and this is a fancy word for those that help institutions get cryptos, mostly Bitcoin. Galaxy Digital, which is traded on the venture exchange. Acuna Capital is a market maker plus liquidity provider. Cumberland Mining, which is I forget the larger trading company, but they're a subsidiary of a larger trading company. We've seen large fund investments. I believe it was the Harvard Endowment Fund made a large investment in Bitcoin. So we've seen that, and I think actually from secondary evidence, both hedge funds and large family offices are the large traders in Bitcoin. We haven't seen too many banks get into it, but we've seen a lot of large family offices, and in fact, I field that question a decent amount. And then we're starting to see high-frequency trading outfits. I am nervous about that more than anything. I do trade the S&P futures as well, and those algos really make it a pain in the butt. But they're coming to crypto. I'm building algos for crypto, but I'm talking about the large shops that tend to toss markets around and paint charts and whatnot. Just a quote from Josh Lim. This was when I was on a panel here at one of the larger trader money shows, Trader Expo in Vegas. Josh Lim, a trading director at Galaxy Digital, again, a crypto liquidity provider. The OTC market, over-the-counter market, this is where crypto is not traded on exchange, but just traded between large players by sending money and then sending coin. It's about 200 million a day. This was a quote November last year, so actually it could be larger now. So I'm going to give you the crypto market. I'm going to give you mostly the Bitcoin outlook, 2019 and beyond. With a few cryptos thrown in. But I'm going to introduce you to the Elliott wave theory real quick. Some of you guys may be familiar with it. So 1941 should mark the final correction of the 13-year pattern of defeatism. This termination will also mark the beginning of a new supercycle, wave 5, comparable in many respects with the long advance from 1857 to 1929. Super cycle 5 is not expected to culminate until about 2012. This was our Ralph N. Elliott, the originator of the Elliott wave theory in 1941. What he had done is essentially predicted a long run in the US stock market that actually is still going. Now, we've had bear markets in between, but from an Elliott wave perspective, those are subwaves of a larger wave that he was talking about. And he said this in the Depression, or just after the Depression was ending, when the US economy was in kind of a rut, coming out of it, but in a rut. It wasn't until the 1950s we really saw a very fluid economy, at least in my historical studies. Okay? So this was a crazy man talking at that time, but he largely has expressed truth, except that he was maybe off by 8 years because we're still going, right? And we haven't topped yet. We've only had subwave tops. And this is the basic Elliott wave structure. An Elliott wave, a person that studies the Elliott wave theory believes that markets, or trends at least, form 5 waves that have 2 corrective waves. So 1, 3, and 5 are the trend, the motive waves as we call it. Those are the trending waves. And then we get wave 2 and 4, and they follow usually a 3-wave format. There are some other correction variations that I follow. In fact, Bitcoin shows a very complex one most of the time. But the wave 2 and wave 4 correct in 3 waves. So if you are a very visual person, again, I came from a design background, if you stare at a market that's trending, you will see this. Just look. You will see this sort of structure. Now, what's interesting about it is that usually these wave patterns follow some kind of vibe in the market or sentiment. Okay? If you guys remember this, everyone remembers the housing market of 2007 to 8, depending on where you lived. I lived in Michigan at the time, actually, not here. And it happened earlier there, but there was this euphoria in the market. That was some degree of wave 5 in the housing market. Everyone was buying homes. People that couldn't afford homes were buying homes. Everyone thought they can make money on homes with impunity, forever, always going to make money on homes, and then they crashed. That's a very typical wave 5 action. Often when we start a new trend, we get what's called disbelief. So the first wave of Bitcoin off of the December low, which rose, I don't remember exactly the level, but it was, I know the February wave 2 was 3,000, 3,500, but I think we rose to about 5,000 or so. No one believed it was the beginning of a bull market. I mean, my subscribers can tell me I was looking for that area. They know against what was being said on Twitter, social media, and all of that. I didn't know for sure we were going to bottom, but I was looking for one. Okay, and so when I saw first 5 waves off that low, because this is fractal in nature, even the subwaves are divided into 5 waves, I was like, I think we have a new bottom. Okay, and this was when we were at 3,000. We have had a 3x gain since then, and hardly anyone believes it still, because we're in a larger degree wave 1 of the 5th, which we'll look into. All right, and then when you get the wave 2, which was for us was our drop back in February to 3,500, everyone says the bear market's returning. This is the very nature of these wave patterns. So if you start to listen to the market, understand the mathematical nature of these waves, the visual of it, you can actually have a giant edge in trading. I talked about the math real quick. I'm not going to go too much into this because we teach it on the site, but all of these waves have basically a range of mathematical proportions. So wave 2, for instance, typically holds the 618 retrace of wave 1, just as an example. We are generally trading for the 3rd wave. So they tend to be the longest and often the fastest wave. Not always the fastest, but they are generally the longest. Also, they subdivide in a way that stretches. And so they're typically 1.618 length of wave 1. Now I'm going to show you how the next wave up in Bitcoin should be. I have an alternate count, but should be a wave 3 coming up. So if you're not on board during this correction, you may miss it. But I'm also watching for it to fail. So and I'll show you the alternates that I'm viewing. Basically, my line in the sand, which I'll talk about further, is 4,300. If 4,300 breaks in this market, then this bull market or this bull run is over for some time. Okay, just a line in the sand, and that's basically the 764 retrace of wave 1. Okay, so the math actually gives us a very objective way to look at the market. And as my subscribers know, once that 764 retrace is broken, I'm like, guys, I would not be in this. Just dodge it. I mean, unless you have a more long-term perspective and you can look towards a lower support, okay. But if you're looking for this run, like swing trading, I would be out of it. Okay, and we'll talk about that in relation to Bitcoin. So where are we now and where are we going? So first of all, Elliott wave is fractal in nature. So if I just zoom out on the log chart and apply an Elliott wave count and all of its mathematics, all of the relations of every wave. My expectation has been that we hold 3,000 and that we have a run at least to 65K. Now, Bitcoin has a tendency, and sometimes tendencies break, but a tendency to really extend in fifth waves. Gold also shows that in its Elliott wave patterns. So 65 has actually been my minimum expectation from this long fractal. Actually, the top of the box is over 200K. Okay. Now, what happens is when you have these big fibs out here, you look at the smaller fractals to try to determine where this is going on a tighter frame. Because it does nobody any good if you're looking for a top of 65K. But Brian said maybe it goes to 225. How the heck do you manage that? Well, you use smaller fractals, which we'll talk about. So when I gave a talk, I think it was Vegas, MoneyShow in May 2019, this was my very slide. Okay. So we had a wave 2 bottom, 3610. Wave 2 of 3 at 3610. And then I was looking for a top at 8,500. We topped right about there. Now, I thought that might be the top of a fifth wave, but I had this alternate in red, which is that only being the third, and that turned out to be what was the case. And you can actually see that I was projecting to 13K, and we topped at 13,900. So we even stretched there. And again, that's the tendency of Bitcoin to extend in its fifth waves. Now that we've completed all of that, the little parentheses 2, and this is the correction that we're in right now as my main count, that needs to hold 4,300. Okay, that little 2 that's, let me point to it, this little 2 here. Now in May it may have been in a different spot, but now that I have the fractal, 4,300 is simply where we topped at 13,900 and in log the 764 retrace. I do not trust a chart after 5 waves and then we break that 764 retrace. And I tell you, that is really reliable. Sometimes a market retraces like 0.88 and bounces. It's so rare that I do not trade a market that retraces more than 764 of a 5-wave move. It's just so damn reliable, okay? So that's where I'm at. As long as we're over that level, I consider us in a bull market. Now, I have another red extension, which may be that this is still only a third wave. Now, I have a lot of problems with that count. Some of our analysts on our site have that perspective. I don't necessarily share that except as an alternate. So I'm going to say that if we hold 6,800 and we rally to 20,000, that may be the end of our run. It is very much possible. At fifth wave confirms over 20,000, and it's just a slightly new all-time high. And then we break down, and the supports are way below, like 1,600 or lower. Okay, that's one perspective. However, my main perspective is that as long as we hold 4,300, and if we then hold 6,800, we have a run to 129,000 right now. That's what the fractal is showing. Okay, this can change. For one, we may not hold 8,000. We may not hold 6,800. Okay. We may go down to 4,300. If we go down to 4,300, this drops significantly because it's all based on the length of wave 1 and wave 2. And again, all of this is probability. It's just we know from experience that we can measure the 1618 again of the third wave, and the 200 extension is typically our wave 4. Now, Bitcoin also tends to extend past that. So even 129 may be breached, and that 200 level may be perhaps seen. Okay? So I don't want you to walk out of here and say, Ryan said this is going to 129,000. I am only telling you that currently that is the current fractal projection. Remember that we had a projection to this big range of 65,000 to 200,000. And now I'm taking the smaller fractal and I'm projecting it forward. Okay? And right now, today, if we hold 8,000, I have a potential run to 129,000. Okay? But in the meantime, we're in a correction. And that correction has no sign of being over at all. And I would love to see this drop, selfishly, all the way down to 4,300. I don't think we'll get there. Right now we have a projection to about the 8,000 in the latest leg, and right now we've been sinking overnight. I'm pretty sure we'll be about 9,000 by tomorrow, unless we pull right back up again into resistance. We had a resistance level marked on the site just about where we hit, and we came down. It doesn't necessarily look impulsive. When I say impulsive, it doesn't necessarily look like it really wants to. It may be corrective down, which means we may take another run at resistance before we drop. But right now, I would love to see us drop to 9,000 overnight and then only get a corrective rally and then drop again to about 8,000. And then I'll be watching for a bottom. It does, again, that does not have to be the bottom. Corrections tend to become very complex over time. You watch for a bottom, you let the market show you a bottom with a 5-wave pattern, and then you just simply mark support based on that pattern and then go. It's actually a very simple way of trading the market. I tend to sort of catch the knife a little bit when I get my first target. So at 8,000, I'll start to put in new positions. They're going to be small. Once I get a 5-wave pattern up, I'll increase those positions. And then once I get a drop back in support, I'll increase it even more. Okay, so that's kind of how I roll into a market, and that's something that I teach on the site using Elliott wave theory. How do you make the Elliott wave theory? If you don't understand the practical nature of it, it becomes extremely academic, and we do our best to actually teach in terms of risk management, trading, and support and resistance, and how you position within it. Okay, so that's where I'm looking right now in this market. It's pretty exciting. I still trade the stock market. I trade options on the stock market, but this is obviously one of my more aggressive trades this year, as long as it holds 4,300. So one of the things we want to note here is that but Bitcoin never outperforms the rest of the market. Typically, we've got altcoins that actually start to perform. We have not seen that, which is pretty interesting. My next talk, which is right after this one, one of the categories I'm discussing is that this market hasn't seen a bull market in altcoins yet. It may be simply that they're waiting for Bitcoin's third wave, and we see that liquidity kind of pour into Bitcoin and then pour out into altcoins. It's often the way it goes. But I certainly I see altcoins have been pretty risky until now, and it's largely been Bitcoin participating in this bull market. But we've got a couple key ones, and I'm just going to list a couple. I mean, I go through about over 100 charts and keep 100 charts for subscribers. And two that I'm looking at right now are EOS and Litecoin. Now, if both of them break their December lows, I feel very different about them. But right now, EOS is trading around $3, and it has a third wave projection. Actually, right now, it's sitting over 500. That label actually should move down to the third of the third, but the actual third wave is over $500, and the fifth wave is over 4 figures, if it actually gets there. Now, again, I always say with these I call them moon counts, these things that are aiming at the moon. Same thing with Bitcoin, aiming at 129. There are lots of levels in between that we track on the site. If any of those levels go at any one given time, sorry, the game is over. It's just, we want to manage our risk, right? We don't want to just you can throw in $500 at this and see if we go to 542. That could be a pretty good trade. But I would not hold anything that long if other levels are not operating. So there's a lot of levels in between which we follow to keep ourselves out of trouble. But this is the projection currently based on this long-term 5-wave move that we had in 2017. Litecoin, this is one of the first cryptos I started trading. I was trading in the $2 range. I was mining it, if anyone knows what that is. I basically was mining at a loss and dumped it back then. I was not an experienced trader. Now, fortunately, I caught a lot of it in the 2017 breakout, so I did okay, but I dumped a lot of my early holdings. But we've had a move to 200. We've got a pullback into the double digits, and now we have potential set up for over 30K in a third wave. So, I don't know how many years any of that one's going to take, because it's sort of on a different time slot from Bitcoin going to 129,000. I don't think we'll see 129,000 Bitcoin and 30K Litecoin, but that's the current projection. So it'd probably take maybe a decade to actually get there. But it's a great deal if you get something in 2 digits and it goes to 5 digits, right? That's what Bitcoin had done earlier. We have a few other ones. Ether Classic, ETC, Litecoin I talked about. Steam, that one's actually one of the ones that may break. TRX also, potentially. BNB, which is the token for the Binance exchange, has been incredible. I unfortunately haven't traded like some of our subscribers have, but it's got a lot more to go. And there's a few others. In the last few months when I was talking about altcoins looking very weak, not the ones on this list, but a lot of altcoins have broken their potential third wave projections, which is unfortunate, and that's just the reality. But at least the Elliott wave theory, even if it rejects there, it tells us where it's going to break. So we've had quite a few, but these right now so far have held. Steam is probably the next one at risk, and then lastly TRX. Well, Ether Classic, Litecoin, BNB are not even teasing breaking right now at this point in time. Just in conclusion, so we saw a terrible bear market, but it was neither unexpected nor unique in its history. During that time, institutions were again, I want to emphasize that this is a legitimate asset class. Pretty soon you'll see cryptos in your brokerage accounts. The institutions are not going to let this wonderful asset class go to waste. They are going to trade this stuff. And they've legitimized it basically not only by trading it themselves and taking positions, but also lobbying some of the regulation that we've seen come into, which I'm going to talk about in the next talk. They've also asked for these derivative exchanges so that they can hedge. If we see Bitcoin push past 25K, I see Bitcoin push towards 65K. You've actually seen today an updated version, which actually suggests 6 figures. Once a large, I missed a sentence here. Once a large third wave kicks off, we should see the altcoins come into play. At least some of them, the ones that are still live, should start to get kicking. But I'm going to watch that very closely. I'm pretty nervous. And then again, 4,300 is the bull-bear line in the sand. Now, it's not just because we tap 4,300 and break it doesn't mean it's over. And in Elliott wave theory, it's a complete invalidation of the break of the December low. It's not a 1-2 setup basically because the wave 2 cannot go past the bottom of wave 1 in the Elliott wave theory. However, 4,300, if we don't just get a spike and reversal past 4,300, I personally will be not trading cryptos until I know what's going on. Okay, just be really clear. A nominal breach is nothing, but usually when we get a nominal breach, we get an immediately spike up. These levels really matter, so you'll see, the candle could get a nice wick on it, and then the thing goes up. If I don't see that at 4,300, if we get that low, if we even get that low, I will not be in cryptos this year until I know more, and I may be shorting them as well, because there are a few exchanges allow us to short. All right, so that's where I'm at on Bitcoin. I hope you find it engaging. Again, sign-up sheets, I think it's been passed around. Make sure I get it. Don't take my pen, please. I walk away with people's pens. But if you can, if someone is the last person to have it, I would appreciate that you hand it to me on the way out or leave it in the back so I can pick it up. If any questions, let me know. Let's see, do I have any time for questions? I have a little bit of time. Okay, so Libra 1 is not a true crypto. It's on a blockchain, but it's not decentralized. So now EOS is also one that it's being crypto is actually questionable because it's not fully decentralized. Libra is fully controlled. So I think it's interesting that it can get people to understand crypto because it will be used like a crypto, but it is not a crypto in that regard because blockchain is only one part of that. The second is decentralization. It's fully controlled by Facebook's foundation. Number 2, it's not investment grade because it's actually pinned to fiat. So you can't make money on Libra, right? You're not going to. The mechanism is not there. It's basically a fiat peg. So no one's going to go after Libra to try to make money. It's just simply a use case, right? And if Facebook has it operating on, I actually see it beneficial if Libra is on Facebook. People are starting to get used to using crypto and then navigate. Oh, I'm more comfortable with Bitcoin because it will operate. It'll be used that way. Now, I don't know why you would use Facebook yet to exchange. I mean, I know they have stores on there, so it's interesting. We'll see. Now, will they ever get through regulation? I'm not sure. So that's my feeling about it. So, yeah. Yes. Absolutely, and that's what I'll be saying when we get there, for sure. Absolutely. And I've actually, on the webinars, I've been saying that. Guys, if we get to 20K and we don't, it's actually a tighter level, and I don't have it offhand, but where we bottom here in 20K, it'll basically be the 764 retrace between the two. And if we don't hold that, you would not hold for 4,300. You at least take some partial profit. And actually, I'm a swing trader, so I'll be personally, telling people, I took profit in 13K. I have to make money on income. I left the tech field to make money on a daily basis on Bitcoin. I'm crazy, insane fool. But so I will definitely be taking profit at 20K. I put it on the site. I'm taking profit at 20K or wherever it is. I mean, the fractal may twist and turn, but I share that out. I share my positioning in general and what I'm doing on the site as well. Some people choose to follow me exactly. Some people are more long-term. I mean, I try to teach that as well. You have to decide what time frame you're trading. I have so much in Bitcoin that I have to. Some of my subscribers are like, I'm putting 500 in GBTC, which is a trust that's traded on brokerage accounts, right? They're just doing that, and they're using my service to kind of trade in and out or do a long-term perspective. Just look at the nightly reports, which kind of give you more of a longer-term perspective. So it really depends on what kind of trader you are, but I certainly will be taking some profits at 20K, absolutely. I actually track Ethereum down to 5 minutes like Bitcoin, and it's in my nightly report. So Bitcoin, Ethereum, and GBTC which is, if anyone's familiar, is the trust that's traded in IRAs or brokerage accounts. It trades as a premium. So those are the three that are in the nightly report, along with Ether in Bitcoin basis, so the Ether Bitcoin pair. So those are 4 charts, and then I actually both of them every day do like not necessarily a 5-minute, but what time frame gives a micro scalper some level of day trading potential in those charts. So I cover those 2 at that level, and I trade Ethereum heavily myself. It kind of tends to be more my hedge. Like I have a core holding of Bitcoin, and then I'm kind of in and out of Ethereum to get a little more volatility when I need it. So yeah.
My second question.
Yeah.
Since you traded,
Yeah. Oh, it was a nightmare. I paid 2017. I paid so much in taxes.
do you have a effective
Yeah, I use software, but my accountants allowed me to do like net transaction. I mean, an audit it would be a nightmare for me. Not because I'm dishonest, but because I have to show the software with the software tracked. But my accountant is also. I don't want to make any tax advice here, but my accountant said, just let's make sure you're accurate about your total net, and we'll put it in as one total transaction, even though I have the records, and I haven't had an audit. So that whole thing's a nightmare. I mean, it is that's one thing I would say. You've got to be up for the tax process. Long-term holding of cryptos is easier for taxes, but I think they're a great swing trade, not a great long-term, because if you're going to go long-term, you're going to hold through 80% declines. You can go to an overseas entity, yes. The problem is I find less benefit. Like I looked into an overseas entity so I can use overseas leverage, and unfortunately it's still actually illegal for Americans with an overseas entity to use the leveraged exchanges. I used to trade on leverage exchanges, 100x on some of the overseas leverage exchanges, but I actually found out they were illegal, so there's no enforcement necessarily against retailers, but I got out. So, sorry, you and then you, so sorry. Yeah. I'm really cautious about that because I've traded markets for over 17 years. Fundamentals tend to distort sentiment. So everyone, say the halving, so everyone looks at the halving, there's kind of a statistic where like 6 months into the halving, Bitcoin starts going up, okay? One day we'll see that not work. And another one is BNB. So BNB burns their tokens, so that's the Binance exchange. Everyone was looking for every single burn quarter for BNB to go up because the supply is getting cut, right? Well, this last one didn't work. So you got to be really careful with halving. So to me, I look at price action. If price action is bullish, which to me is really easy to see, it's not hard. I'm using levels based on Elliott wave theory. I'm also just looking at it. If it's bullish during halving, awesome, let's go. Let's trade this. But one day, I guarantee you, one day everyone will be talking about a halving, and everyone will go all in on it ahead of the halving, and it'll all already be priced in or something, or we'll be in a bear market where the institutions are liquidating. I don't know, but it will not work. Because that's the nature of sentiment. When everyone is in on the same trade, you cannot make money. That's the way markets work, because you cannot make money when there's someone else. If you have bigger pockets on the other side of the trade, you will not make money. If you're a retailer, for instance, right? If everyone, trading is also a zero-sum game. Not everyone can make money. So it's not possible for everyone to follow a halving and then always make money. Some point in time, everyone will get screwed. It's just the way it is. Yeah. Well, I'm careful technically, but people spoke that way during this bear market when we had so many miners go out of business and transactions dropped. People talked the same way you're asking me. Is like this network is not going to make it through this bear market, and it did. So I don't know for sure. We might see a bear market like you might see like a massive wave 5 top, which for my actually most distant wave top potential is actually 500,000. We could say a wave 2 correction in that 500,000 that just utterly destroys the Bitcoin market and it never comes back. Totally possible. But for me in terms of, I don't worry about those things because I'm watching a much more local action. I will see damage long before that happens. I won't be in something in a downtrend that destroys the network. I'll be out up here because just support resistance. You can see a downtrending market. There's no sense trading a downtrending market that's going to drop 80%. That's its nature, right? I mean, this correction right now, we're down, what, 30, 40%, something like that, and we're not done. And this is only a small blip on a after a nice 6-month run. That's the nature of Bitcoin. I don't want to be in it even in a 30% drop, at least not with a full position. And I dropped a lot of mine off in the 13K region. I'm and a lot of it was leverage, so I took off all my leverage. Anyway, so. I'm not familiar with that one. I know of some gold-backed cryptos. I don't know that. Yeah, I don't know that one, the token you're talking about, but there's another one. Is it DGD? I trade gold stocks. My first trading experience was on gold. I'm very comfortable with that, and I don't like personally mixing crypto and gold. I see a major breakout in gold. The gentleman before me was talking about that. We have a major breakout in the gold market. I'm trading that as well. Mining shares, GDX, options. I mean, I'm all over that with my IRA. I don't necessarily need to mix it because I know that I made my first money trading in gold in 2010 to 11. So I'm just comfortable with that. I have questions. I think it's an interesting use case. I think what's cool about it is it's more liquid, right? I mean, tokens are just like, I hate bullion. Like you buy bullion, then you got to go down to the shop and you got to go to eBay or whatever. I have a lot of bullion in my house still from the bull market of 2000 to 2001 that I just didn't get rid of fast enough. And at some point in time, it becomes a pain. You sell at a loss, because it's, so I like that part of it. What I don't know about is the auditing regime. How do you know that the gold's really there? Gold in your hand, a mining company that you can see operating, like that's to me real. I know there's a lot of people that say blockchain and supply chain has a really good mix. I'm from a design and manufacturing background, and blockchain makes total sense in that situation, even though it's real goods being tracked on a blockchain. Gold, I'm like, man, just give me the gold in my hand, even though I think gold in my hand is a pain in the butt. I'd rather have Bitcoin in my wallet than gold in my hand, to be honest. But I think it's an interesting, we'll see. Yeah. Actually, I'm going to talk about that in my next talk a little bit, one section of it. I'm going to speak it really quick. I'll just say it really quick is, okay, our president, his tweets, come on. Let's be careful. All of us and everything. He moves markets with tweets, but let's be careful. Sorry, I didn't mean to say that in a way that was, it drives me nuts, managing an office by tweeting. I'm San Franciscan, so stuff drives me nuts naturally. But if you look at the U.S. Regulatory environment for crypto, it's actually one very unclear and becoming clear, but it's also agency by agency. So IRS wants their damn taxes. He asked me about taxes. You better believe, as a known crypto trader in the sphere, I'm paying my taxes. I do not want the feds after me. This is my main business. I pay my damn taxes. There's no hiding in cryptocurrency. A lot of people ask me that in the beginning. Can we hide in cryptocurrency? No, they're figuring out a way to get all of that tax money. That's the IRS. FinCEN wants to avoid, which is a Department of the Treasury, wants to track money laundering. They're concerned about that. It's still easier to launder money in cash than crypto because crypto is not private. It's a public blockchain. There are privacy coins, but they'll find a way. The NSA will team up with the FinCEN and they'll find a way. And then the SEC wants to make sure you're not buying fraud securities. That's the only thing they care about. So some cryptos have been labeled securities, and the 1934 Investment Act requires that those be registered. Simple. They're also watching exchanges. And FINRA which is a non-governmental agency, works with SEC, and CFTC is helping with that. And then the CFTC doesn't want everyone leveraged out, and that's the Frank Dodd-Frank. So I look at it in a more of a, I don't care about what the president tweets. Even his own cabinets go against him, his tweets, so I'm not even worried about that. I know where Munchin is because he's in the Treasury. Crypto freaks him out, but he doesn't set law. I am worried about Congress, but they haven't done anything yet. I think that they could precipitate a bear market, but I actually disagree that with trillions they can break the Bitcoin market. One, they would be shorting a derivative. They would not be shorting Bitcoin because most of the billions of Bitcoin are locked in wallets. So they can't short the actual thing. Right? That's number one. So they'd have to short a derivative. That puts them at immense risk. They would be stupid. It's a global market. It's more global than any stock market, right? I mean, we can all trade the stock market from any brokerage account across the world, but we're trading on one exchange. You're trading on the U.S. If you're trading U.S. stocks, you're trading on U.S. stock exchange. Bitcoin's traded all over the place. I can go, hey, you want to trade some Bitcoin? Pull out our phones, and a Bitcoin exchange happens, right? So how the hell is the Fed going to control that? They would have to short a derivative, and they would put their balance sheet at immense risk if they're going to short $1 trillion in Bitcoin. Just math. Can they do it? If they're nuts, they can do it. No, but it will be a derivative. I mean, shorting a derivative is very different from, and actually, I don't know an exchange that is a derivative that actually moves price. So all the Bitcoin derivatives are actually watching an index, and they're trading a derivative against an index. So they'd have to. I got 5 minutes. I'll take more questions out there. So last question, and then I'll sit out in the hall if you guys have more questions. I got to talk in like 15 minutes for the next one. So if you want to catch me there, I have a little more time. Any more questions? Well, they're actually working. The Feds are actually working with Ripple. There's a deal using the Ripple platform. Actually, it's not the Ripple token, but Ripple cryptocurrency, a deal between the South Korean central bank, the Japanese central bank, and our Fed. And they're actually trying to get rid of the SWIFT wire transfer method for international transfers, and they're using the Ripple platform, which is a blockchain-based platform. So actually, the Fed's been pretty supportive of blockchain. Now, that's not Bitcoin. That's just a blockchain-based transfer. It's just superior technology than SWIFT transfer, which is a piece of crap. It takes 24 hours to settle usually, and the Ripple platform settles in 10 seconds. So better transfer method. So so far they've been supportive, but we'll see. So I gotta step out. Next talk is in the booth downstairs. I better get to that talk. If you have more questions, if you don't mind coming to that talk, I'm happy to answer more questions there.